All right, Frank, let's move into your charts here. Last thing we're going to do here today. You've got a bunch of your scanning done. I know you found some that you want to share with the team. It's one of the segments every week that the team tackle out there looks forward to the most. I know Coach Emily will be sneaking in here any moment. Frank, what you got here today?
Ooh, let's start with one of those reversals that Maddie was bringing up, and that's Airbnb.
Ooh.
ABNB. We got a breakout. We got a Cody special going on that breakout, at least in my opinion, on these guys right now. Got a nice clean window, right? As your kind of line is drawn up there in that 170 range. That is some old resistance and support zone from days gone by. Little snapback, like the bounce back that we've seen here today. It is a Cody special, right? We don't even have to fight about that one because it pulled back really, really fast right back into that channel. Very straightforward type of a trade, I guess, to me. We're basically, we see some upward movement where, hey, there's our confirmation of the breakout. Let's work our leg up to that 170 and see if we can win that fight. So just a Cody special snapback on a little reversal. Maddie, what you think?
Textbook here, Frankie. If you're looking at picking up Airbnb off a reversal for a swing trade, this is what it looks like.
Yeah.
I mean, that's what else do you say? This is what that looks like. You have a breakout on strong volume. You have a snapback retest. You have confirmation on the 9 kissing against a previous known resistance level. That is what reversals look like. And on Airbnb, this is specifically what it looks like. It's volatile. It's concerning. It's risky. It's all of that. It's not going to give you that 2-week window where you can contemplate life decisions and make the most accurate choice. This is, if you're looking at Airbnb, this is what that looks like. And so, yeah, I like the technical setup here. I like the breakout on strong volume. I like contracting volume on the pullback. I like the last 2 days of consolidation at the support level, right where the 9 EMA is, coincides with old resistance in the reversal breakout. When you take a look at this from an intraday perspective, 2 data points support this. Number one, yesterday's downward movement in price, where to get gobbled up into, right there where the previous known resistance level was. Today, a little bit of a gap down, got gobbled up, same type of time frame. That is support building in the current moment. So yeah, I do like that. And then when you take this look out from a longer term perspective, you see a potential reversal candidate that if the daily chart confirms that bullish retracement, that successful swing trade confirms a longer term reversal of Airbnb. And so you have multiple time frame scenarios that could play a role with the momentum as well. Again, it's volatile. It's Airbnb, right? That goes without saying. It's one of those ones that can shift with the wind, but this is exactly what a reversal in Airbnb should look like. Quick on the breakout, quick on the retracement, volatile shifts, good intraday levels of analysis leading to good swing trade analysis. So, yeah, I like it, Frankie.
T-Dog, you think? Anything you'd add?
No, not at all. In fact, that candle grabbed my attention, Matt, first. I'm glad you highlighted it. The breakout on volume, the snap back into those retracements. Definitely, this is a keeper. I'm going to start mapping out reward risk.
Oh, and by the way, I'd put any swing trade at a coin flip.
Yeah.
But it's the potential return with momentum behind it that you still take it, if that makes sense.
Mm-hmm. Yep. It's the pattern.
Yep. It's that. Well, let's stick with one other reversal then. And that's Fold, F-O-L-D. Got a little biotech company who have been sideways for quite some time now on the bottom end of it. Really finally just started breaking, at least in my opinion, out of that range this week. Today's candle, definitely a very nice addition to it. Long sideways. I know this is one of Mark's things, right? Something that's gone sideways we all like it to one degree or another. Long sideways movement, finally breaking to the upside. Got a little bit of room to run too. What I like about these guys is, one, they're fairly inexpensive, right? In the $11 range, which is always nice, right? You never complain about that. They have a little bit of room until their 200-day moving average, which I think we probably have to respect, at least as a potential, place where we need to do something, whether it's take profits, scale out, move stop losses, whatever. But I do think that still leaves you in a favorable, over 2-to-1 risk to reward type of scenario. So a little bit earlier maybe than the Airbnb. And if I were picking one, and luckily you don't have to, right? You can trade whatever you want. I might prefer Airbnb just a little bit, but I do really like this bottoming pattern. I really like what the way the weekly candle is going to look coming out of this consolidation as well. So Tim, I'm going to throw it to you.
It's going to look like confirmation is what it's going to look like.
Exactly. It's going to be, and it's, it's, listen, is this the bottom? I don't know, but this is what I look for as a bottom fisherman. I want something that's very, very clean. Technically, it's very easy to map out a trade. I like the window that I have to work with. Doesn't necessarily mean that 200 has to be my target, but I do have a nice little window of opportunity. And so, yeah, I'll throw it back to you, Maddie.
Yeah, there's a couple things supporting this, Frankie, and it starts with multiple time frame analysis. And when you're looking at multiple time frame analysis, day traders, they look at intraday analysis, swing traders look at daily charts, and in position traders, investors look at weekly charts. That's a very generic way of saying it, but that's basically what different types of traders look at different time frames.
Yeah.
As a swing to position trader, the two time frames that are most important to me are the intraday data supporting the daily evidence, the daily price action that we're reading. Okay. And then when you look at it from a multiple time perspective, seeing the weekly chart and having that confirm your bias on the daily chart helps build confidence, in my opinion, as well in the position. And what I'm seeing here from a daily perspective is, number one, we just broke out of the range. That's number one. You're seeing a little bit of evidence start to build on this 9 EMA, which we love as swing traders. We love the 9 EMA as swing traders.
We do.
And you're seeing that evidence start to build right here. In fact, a nice little test of the 9 EMA for the first time in the last week, pounded off that today, and then looked at confirmation. You bring this out to a longer time frame, and you can see this reversal really clear here on that longer time frame. Nice little double bottom scenario right there south of $9, right about $8.75. Comes back up into the $11 range. Resistance is confirmed the same way it was over here. Comes down into the same range at $8.75. Confirms that. It's dealt with multiple different earnings announcements in this consolidation, and yet the pattern maintained its integrity. When you're looking at it now, you're looking at today with confirmation against that reversal. Frankie, you said the moving averages are smiling to you earlier today. That had a strong jawline on the one you were looking at. This is more of that traditional, just U-shaped type reversal.
It looks like a villain's mustache,
right? like V for Vendetta's mustache, a little bit. But so you got you got compelling evidence on the weekly chart that does support any type of trade on the daily chart. I like this from a reversal perspective. We talked about it a couple weeks ago in the scatter report meeting as it was kissing against that. Never occurred. Got that confirmation here this week. I like it. I think it has multiple time frame. The only question is targets for me. I do think you got to take into account $12 here. $12 is an old resistance support, a lot of consolidation over there, and then you do have an old pivot point at 1280 that is slightly concerning as well. So I would just have to look at entry to stop and entry to targets there, but I think you're fine.
So yeah, I would imagine you're fine, and that's always, that goes without saying, right? I'm sure everyone here has passed on a really good entry because risk reward wasn't there. We complain about it, but there's a reason it's our rule, right?
Well, there's just so many stocks to trade. You don't have to trade negative reward to risk ratio ones.
Nope, and you shouldn't. Right. You shouldn't. Right. There's a reason. Pretty much every swing trader, has that rule, right? So,
well, and specifically the way we do targeting and tackle trading, it's 1-to-1 at target 1 and 2-to-1 at target 2. According to the step system, but our target ones are always extremely conservative. That's just how we are from a targeting perspective.
I think it's a good, solid approach personally.
Can I throw a little cold water on this one?
Sure.
I just want to see what you guys think. I mean, this is a biotech company, right? And
It
the
is.
very first question I had was that gap back in February. I looked at 5 years of data. It's the only time it's happened. It was clinical trial data that came out in February, made the stock gap from 19 down to 13. Does that throw you guys off the trade at all? I mean, when you see one gap in 5 to 8 years that was an impact of news around a biotech company, or do you just see it, okay, it's a cheap stock and I can map out reward to risk based on my comfort level?
Do they have a drug coming up in front of the FDA in the next 2 weeks?
I have an open question. I don't have any of that.
I would have to. Obviously, I am analyzing technically before I make the trade. I would certainly look into that.
Yeah,
Sure, and I think that's fair.
open questions for me.
And I know some people, don't like to trade the biotechs, and I listen. You never have to explain to me why you want to shy away from a stock or an industry or whatever the case might
That's
be.
all personal preference.
It wouldn't, it wouldn't concern me personally. It just doesn't have that history, right? I would understand that just like, I mean, hey, I might wake up to a huge gap one way or the other. That is, I think, an added risk / reward, if I'm going to trade this. But I don't think, if I thought for 1 second that they had a history of just unpredictability, then I would 100% say good luck to everybody doing it. But I personally don't feel that way.
And they don't have that.
And I don't see that in this chart at all.
Yeah.
Like you just don't see that. Yes, the one scenario here, but again, you're talking about one scenario where a drug was probably very well known going in front of approval. Like, I'm sure people who were trading and investing in this stock were well aware of that. So, well, not everybody, but they should have been, right?
Right. And the investors definitely were.
Oh, guaranteed. But yeah, I'm with Frankie. Like, no.
Gotcha. All right.
Yeah. But, I mean, I think it's fair.
The end of the world could happen on Sunday. We're still going to be making some trades.
There you go. I just want to throw it out there.
But
all right. What you got next there, Frankie?
All right. Well, let's go from a couple reversals to a little pullback on a good friend of pretty much all of ours here at Tackle Trading and pretty much everybody in the market, and that's Microsoft.
Yes.
Yeah, this one was an easy one, right? This one was just let's get this one through, get it over with, so I can
move on, save time. By the way, this is exactly how the scan report meeting goes, guys. Is if something's really good, like everybody will be like, yeah, move on, save time, we're good. Yeah. Nobody's saying no to that. Yeah. If it's a garbage pick, we'll debate it for 45 minutes, like literally.
Yeah.
Microsoft, we're good. Everybody's good. Flag off the 9, hammered candle. It's hammer time. Let's start dancing. Put on the pants. We're good.
Yeah. Not anything wrong with that, right? Yeah. That's, I mean, how do you not like that developing setup, right?
You have to.
Gotta like where that one is. I will do a couple more. I love doing these. Maddie, a few weeks or a while back now, you did an earnings roundup on HCA. Had a big, huge gap on, if memory serves, and mostly I just know if you bring it up in earnings roundup and it was a good response, and I noted it's because it was a good report. So I would assume that my memory isn't that bad. Here we are. We've now had basically a couple of months near of consolidation, pushing the top of the breakout post earnings. We've had some time to let that volatility subside, a new pattern develop, got a clear support zone down at around 240. We've got a clear resistance level up here around, around 255 ish, depending on exactly where you put it. Could I talk either of you into a breakout if we get it on HCA?
Looking at that earnings report, that was a very good earnings report, by the way. You're talking about a company that beat on EPS numbers. And when I mean beat, I mean like utter destruction.
Yeah, I remember it. Yeah, I remember you going over it.
Revenue numbers were decent, but I believe they certainly beat. But it was also their guidance. Their guidance was up both on the revenue and EPS perspective. So HCA was one of those healthcare stocks that had a lot of healthcare stocks had good earnings season. They're slowing momentum now post earnings, but they had really good reporting season. And HCA, from a fundamental standpoint, certainly was a standout there. But when you look at that secondary type scenario, the first opportunity you had was this flag. The second one was that breakout. Everything else is just garbage up until the time we're looking at it right now from a breakout. And so nothing really confirmed or broke out. When you look at this now after 3-4 weeks, what you're going to see is you're going to see that choppy nastiness on the daily chart. That just looks like a high base that the 9 EMA is now caught up to it with it fighting for a potential breakout. And the conversation we always have on breakouts and the cleanliness of it starts with wicks versus bodies on candles. From a body perspective, you got to call this a breakout. I do think you have to look at the wicks though. The 255.28 wicks, that coincides really closely with the high there, the high there, the high today. And so I do think you need to close above the wicks. But if you close above the wicks, you're talking about a multiple time frame perspective of swing traders and position traders simultaneously liking this, whereas the backdrop of the fundamentals for the investor class is extremely strong right now. And so, yeah, I wouldn't say no to that one, Frankie. I like the consolidation. And again, outside of one day, guys, this consolidation was for the most part within the candle here, right? It was within a lot of that candle. And so you're looking at that as a potential breakout with multiple time frames. I say yes, but I also say you got to close above the wick.
And that's fair. That's fair. But I love patterns like this. These are the kind of things I look for in markets. Like when you have a strong fundamental catalyst, like Matt talked about, give me some time to set up a new pattern to a new entry. I love this kind of stuff. So yeah, for me, I'm a yes.
Yeah, I love the post earnings that have taken some time to develop type of patterns as well. I've always been a big fan.
Well, and honestly, my favorite is when we get a nice little swing setup a week after earnings, right? Give it a week, give you a flag, give you a breakout. I love that. But if you do get more time like HCA did, because you don't get to pick it, right? That's not your choice. You don't get to tell HCA to break out. You don't get to tell what to do. And so you just got to kind of read the analysis. And so, yeah, I do like the potential breakout here. That was strong, didn't confirm. Now you're looking at it and saying, now with all this time now of consolidation, I kind of like it even more than I did even 3 weeks ago.
Yeah. You know, I've never really thought about it like this, Matt, but like post earnings, if it's not like the first week, give me over a month in the developing of the pattern. You know, when you said that's immediately kind of that is kind of what I do.
How we do it. But it's not just from a technical perspective. We do it because it leaves our mind. It leaves what we're thinking about, right?
Yeah.
HCA comes out, reports earnings. We're all over it that day, right? We're talking about what we need. The following week, I'm looking at, or a week and a half, I'm looking at HCA and I'm saying, okay, that hammer candle right here, right? That hammer candle, testing that wick, testing it. I'm like, you got a chance. Let's go. But then it doesn't do it. And I'm like, okay, I don't look at HCA, right? I don't look at HCA. I'm not talking HCA. This week, I'm all talking Fed and consolidation and breaking down markets and everything else I'm doing. And you know what else? I'm also doing other things outside of the markets and whatnot. And I don't think about it until my good friend Frankie brings it up on a random Friday. And I'm like, oh, yeah, I remember that potential trade. Let's go. So it's kind of psychological in nature as well, right? It just, if it doesn't confirm in that first week or week and a half, you're just like,
yeah.
I'll catch it when either somebody talks about it or when I find it on next week's Friday scans.
That's
right.
That's what I'll catch it.
Happens to me all the time too. Yeah.
Sounds about right.
Any more, Frankie?
I hope other people are like, yeah, that's me too.
I think that's pretty common.
That's
the way we do it.
Yeah, I think it is. Just maybe a couple quick ones. Won't take too long. Darden Restaurants broke out today. DRI, another long range consolidation, multiple time frame analysis. Just a good clean. The only issue theoretically we might run into is there's a pretty good sized candle. So depending on targeting and stop and everything, might be needing to look to the secondary pattern. I hate when it has a huge candle on the day of the break, because for most breakout trades, my rule is a close and not going above it. And this would definitely fit into that category. But you gotta like breaking out of this long-term consolidation. And I, just me, the way I target, in that 167 range is where I see these guys kind of as naturally working their way to in the days ahead. So, whether this is a trade that could make the report or we can make the risk to reward work, I'm on the fence on that. It's going to be fairly tight for me personally, at least, but I love the pattern.
And my next special webinar I'm doing is when to front run.
Ooh.
Ooh,
I
there you
like
go.
that.
I like it too.
Because, Frankie, I don't love chasing.
No, it's tough to chase.
Right?
You don't want to chase.
I just don't love chasing. And I feel like with Darden, you're chasing a little bit of the breakout right now. Number one, not just because of the size of the candle, because of the distance of the candle where
Right,
it came into without
we're fairly
resetting the
extended.
technical, right?
Yeah, we had like a
And
day.
so I kind of feel like you're bar by bar here at this point. So
think
you're
that's fair.
certainly looking at it as a breakout, and it certainly can be traded. I just think you're doing the proverbial bar by bar momentum style, right? Entry above the high, stop under the low, just manage that. And as long as that bar continues to show momentum, you're good to go, right? So I do think you can momentum bar by bar this, and you do got to love the weekly breakout here. I do think you got to love the
100%
weekly
agree.
breakout here. That weekly breakout consolidation for 4 months, breaking out. That is a beautiful technical scenario to be in for Darden. But just from a swing trader's perspective, I think there's a lot of candidates you don't have to bar by bar momentum with. And if you and this is just me, if I don't have to bar by bar and I can just go to a standard technical scenario where I can apply step system mechanics, I'd always do that over bar by bar. But again, that's just more personal preference than it is actual system. Bar by bar momentum trading is can be extremely powerful. But I am going to put a webinar together. When to front run.
Front run.
There you go.
It'd be a good one. I would like, obviously there are times you do it when you're breaking out. There are times you do it on your flags.
Yeah.
There's a couple of different
and those
scenarios.
times have nothing to do with how you personally feel about your life.
That's right. It
That's
should
true.
be
They
an
have
emotional
everything
decision.
to do
Technicals.
about the technical analysis you're reading in front of the breakout.
Subtleties in your technicals. That's right.
All right, I got one more for Tim, and then I'll shut up. This one's for you, Tim, and that's Carnival, CCL.
Oh, goodness. I was hoping you'd say something else.
Oh. You had such our grandmother's response to that one. Every time I'd walk in her door, she'd look at me and go, I was expecting somebody else.
I was expecting Tim. I've heard all of the Tim grandma stories. They might be embellished a little bit.
No.
No, they're not.
They are not. They are not. This is traumatic experiences when I was a child.
No, they're not.
I don't dispute that.
Even Tim's like, they're not. They're not.
They're not. I'm not going to sit here and front that. But what do you got here? I mean, Carnival Cruise Lines obviously been all over the news the last couple of years. What are you seeing here, Frank?
Well, a couple of things that I am interested in. We've created higher lows along the way, right? So over this last little while, we've been dipping and slipping, but we always seem to find a way to create a higher low. We keep getting slapped down when we get into that 200-day moving average, right? That's not terribly surprising. We probably expect that as the most likely thing, right? Here we are today trying, and we'll see if we're able to do it, but we're trying to close above that. We're going to need some follow through, right? And I understand this is not going to be in everybody's type of a trade, but as it is right now, it looks like we're going to close above that 200 and above the 50 and above all that junk. We've got a ton of old stuff, right? Some old resistance going back into December, support zone throughout March into May. We've got some history at this price point and a pretty, while again, they've been everywhere up into the next resistance level. When I look at these guys, I say, okay, well, what causes me trouble? Right. And when I look at these guys and wonder what scares me off, if we can get through what we're fighting right now, I have nothing jumps out until $30, where we have, we do have some stuff there, right, that we do need to be keeping an eye out for. So we have a little bit of a window of opportunity as well. So it's kind of the increasing, support levels, the breaking above the 200, which, again, there's still some time. So we'll see. It hasn't, as Mark and I say, you haven't closed until you've closed, right? But I'm making a general assumption. And even if we didn't, then I could use today, what would be today's high for that confirmation going into the future. But just a little bit of a reversal. I like it. I'm figuring this is a place where a lot of bears would potentially be stopped out for whatever that is worth. Little bit of a window into that $30 range. If I'm looking at reopening, I can get a favorable risk to reward, some nice clean space to work with. I'm interested from a technical point of view.
I think it's fair. The only question I have from Matt then is the little candle consolidation over the last 3 days. Is that resetting that as a pivot, or is this an extension of the pivot from 21?
I don't think it's resetting the pivot, but I do think you're confirming a breakout. And so pivot analysis would need a little bit more time, in my opinion. I see this more as 2-day consolidation before you break out. But I also don't, I think we're kind of, what's the word? I'm trying to figure out the word when you're nitpicking, right? I think we're nitpicking that
Splitting
a
hairs.
little bit. Yeah, we're splitting hairs, nitpicking there, because I think the most important thing is in the analysis is this a breakout at this point?
Yeah.
And so you are reclaiming the 200-day moving average. You're reclaiming the 24 handle and slightly north of 24 with the 200-day moving average. Those are both very supporting evidence. You now have your moving averages turning over. You reclaim the 50-day today as well, but your 90 EMA is turning over here, going to provide some momentum to CCL here. The question, and this is not a question so much on Carnival as it is just in reversals and opportunity in general, is just where do you target in this chop? Because as Frank says, there's nothing that concerns him too much until 30. There is some chop between 25 and 26 that could play a role, right? And so, and again, some of that is just, well, it's subjective, because the longer it goes, the less you're concerned about all of this stuff over here, and you're just starting to look at this stuff right here. And so I'm looking at 25 here, and I'm saying, okay, if we can achieve this, the 200-day moving average, give us some continuation momentum above 25, I can certainly see it. We have some evidence in recent history of running a breakout of 24 to 30. You saw the breakout of 25 right here to 30. And so there has been evidence there. I do see the opportunity, and I do think with Carnival, you got a little bit of cheap risk. And so with that cheap risk, with the momentum you're seeing, maybe you discount a little bit the mess to the left. This is a choppy stock in general, right? The kind of the psychology of Carnival Cruise is a choppy stock, but I do like it, Frankie. I see a little bit of chop that does concern me, but I do think the opportunity is probably the opportunity outweighs that perception of risk.
Yeah, I think that's a fair read.